would like to review one of Jay's trades, uh,
Mm-hmm.
Maker, the 2nd of February. So he found some nice consolidation, a classical consolidation, and just to wait for its breakout. So he anticipated on a breakout. So this is a typical breakout trade. And Jay, he is actually an expert in finding breakout setups. Me personally, I'm more a reversal trader,
Mm-hmm.
and Jay has a different approach when it comes to the market. So his thesis is classical consolidation at resistance. Understand resistance, price at resistance, hovering around resistance is still resistance. It's
Mm-hmm.
simple like that. And he expected some pullback, and then eventually the trade worked out pretty well. I think within a few hours he smashed already TP1.
Mm-hmm.
That's really nice. And then there was weakness from Bitcoin side, which is normal because Bitcoin, you can see Bitcoin as a leading, for me, I use it as a leading indicator. If Bitcoin goes down, often, altcoins go down as well, and even, stronger than Bitcoin normally does. And his suggestion here was, okay, there is weakness. I need to manage my risk. Move your stop loss at entry or above entry. You have already TP'd one, so this is basically a risk-free trade setup, and I like that idea of a risk-free trade setup, especially when we are hovering at resistance. So it takes out the anxiety, and I like that.
Yeah, I love that side of things. In fact, one of the things that I respect so greatly about not just Jay, yourself, and other people that are swing and more position traders is the amount of patience and the anxiety that you have to deal with in those situations. Like one of the big things that led to me when I understood more about myself as a trader and as a person, I realized that shorter time frames suited me more because I like to see the trades open and close within a day, right? Not holding them overnight, because I realized, if I'm honest with myself, I'm someone that holds that in the back of my mind, and it's a constant that's always there. So anytime you can get to a position that's sensible, backed with technical analysis that you can de-risk, perfect.
Yeah. I heard that you had some good trades as well last week.
There was some decent trades last week, actually, but the one that I really want to cover with you guys, and I don't know whether you want me to jump in now or we'll do it towards the end, was actually one that didn't work out. So, we the analysis on it, we really discussed it. We covered it on the live stream with everyone as well, so everyone could get involved. But we just kind of got front run on it, and that's been a little bit of a common theme with some of the crypto assets recently for the style of trading that I do, which, like yourself, is very much reversals. I'm looking for swing failure patterns, deviations at range highs and lows, and this one just kind of got away from us a little bit. So, do you want me to jump in with that one now, Jimmy?
I think that a lot of viewers are really curious to know about that. Yes, and I as well. So let's
Awesome.
go.
Well, we often learn more, or definitely as much, but sometimes more from our losing trades or ones that don't trigger than we do from our winners. So, just to give a little bit of overlying context, I'm someone that likes to range trade a lot. I trade purely price action, although I do get some wonderful insights from our fundamental team as well that really help me. But here we've just got listed up daily mother bars. Okay, now this is a part of what's known as an inside bar pattern. So, very, very quickly, for those that don't know, if we're looking at an inside bar pattern, right, we require a 2 candle pattern. The first of which would be this candle here, is known as the mother bar. The second of which is the inside bar. Now, for this pattern to qualify, when the second candle closes, the high and the low of this candle have to be within the high and low of the previous candle's range. All right. We then take the high of that as the mother bar and the low as the mother bar, and then the high and low of our inside bar. Okay. Just to give it some context. And we can see that we have several of these overlapping. Now, in context of the market, it often means that price is slowing up, that it's starting to range before it gets ready to make its next directional move. So with that in mind, when we trade any range, we're looking for deviations, or fake outs of the range high or range low. If price then comes back within it, we then target the far side of the range via the midline or the EQ. And the trade that I want to take you guys into is one that was set up within here, right? Now, I'm also someone that pays a lot of attention to candle patterns and candles in themselves. And we can see here, we've got a real bearish candle set up here. So let me zoom in for you guys here. Sort of like a pin bar style candle, this long upside wick showing that there's a lot of selling pressure coming in. This small body, almost thinking of it like an anchor, acting as a weight, drawing price down. Then when we have this engulfing candle here, and for my interpretation of this, I'm using purely the bodies of the candles. We can see that the volume in the body of this candle engulfs the prior one. That gives us an idea that we're stepping back into the range, okay? Now, when we clear the mother bar low here, this small internal mother bar, and then we retest the underside, we look towards the EQ of the master range. When we lose that is when we find ourselves in here, okay? So I'm going to drop this down onto an execution time frame for which I use typically the 3 or the 5 minute charts, okay? So let's find exactly where that was, and then we can see what the premise behind it was and look at the reasons as to why it might not have worked out. Incidentally, the grey box that we're targeting down here is a weekly fair value gap, meaning that there's an inefficiency with price, and that's an area that we look to target, or we look at it as a draw on price, right? As like a magnet for price. So let's make this a little bit bigger. So now we're zoomed in, we can see the levels in a bit more detail here, right? One thing that I like using are order blocks on lower time frames, okay? And this order block was off the 5 minute chart. To give an example, we can see here when we lose a key level and we break down, when we see a key order block, we're testing underneath that, it's resistance. In the same way we would be looking for a support and a resistance flip. That's what we're looking for here. So when price breaks down here, we set this order block here, we come down. Now, what I like to see in an order block is I like to see it set, which it was here on the 5 minute, right, which was the last up candle before this breakdown. Then we want to see a retest of this. Now, this initial move away that we can see here tells me that price is ready to go lower. But what I then want to see is I want to see this order block hold, and I want to see a structure break. I want to see a structure break and an impulse move away, okay, letting me know that sellers are stepping in. So before that, we get our sweep, which is important for me to see liquidity taken from the opposite side of the market, fueling moves in the opposite direction. Then when we break this low, this key red line, what I was looking for, and this was taken on a 5 minute, is a draw into this inefficiency here, which is a fair value gap. And if I draw that along from here, we can see we just fell marginally short of it here, okay? And even when we came back into this area, the sell pressure was too strong to revisit that. So in hindsight, what do? Well, we don't want to change our systems unnecessarily because these things are tested and tried and back tested over countless years and hundreds of hours of work. So you don't want to have a knee-jerk reaction. Personally, what I look to do is I look to say, what could I have done better on the trade? If something like this becomes a consistent problem, I review it in my journal and I would say, okay, maybe I need to move back towards a breaker method, which for me would be placing our entry on this line, which is, for my own terminology, what I call the breaker line. And the principle is that we get a sweep, we close below the low that sweeps the high, and a retest of this line is our entry, and our stops go above this high. However, when we're dealing with tighter range constrictions, when we have larger moves, this can really affect our risk to reward. So maybe you can look at it and say, well, maybe it's a bit greedy. Maybe you should have been happy taking a smaller risk to reward trade. If this was to happen consistently, that's how I would look to then affect this and change it moving forward. But as for now, the system works well. We've seen it on the Matic trade. We've seen it on BTC, ETH last week as well. So while it does that, I prefer to wait and be patient, wait for a retest into here, because my risk to reward on this trade, even trading it down to the mother bar here, would have been a 10.8 R. If I then have this as my entry, it drops to a 3.2, right? So that's always when we then plug in where our risk to reward comes in these kind of trades.
Love the
What do you think, Jimmy?
I love the explanation. To be honest, I love the explanation. Sometimes you have a setup and you get front by the market. That happens all the time. And that's actually also one of the struggles traders often have. The key is how to be consistent with it, to accept that randomness that always going on and on and on. Sometimes you have a setup and you need to wait a long time. This again requires patience. I think it was Julian who called APT
Sure, yeah.
short setup. It was. I think he initiated. I think 2 weeks ago, something like that. But it
Yep.
took, I think, what is now 2 weeks before it came into fruition.
Hmm.
Uh, so as I said, like trading, it always comes with some kind of discomfort, and it's actually you who needs to be strong enough at the end of the day to deal and to accept and embrace that discomfort.
Hmm.
So with that said, I think this was a pretty good review of this week performance. Of course, we couldn't go through all the setups. We might do that next week.
Hmm.
Uh, for those who are really interested to trade with us and to get education, so we have a series of videos you can get on our website, thebirbnest.com. And if you want to have access to our free signals, you can get them as cheap as for $0 and 00 cents. It's totally for free. Just go to thebirbnest.com/bybit. Um, it's 100% for free. Try it out yourself, and you do get education. And that's actually what we stand for. It's always education and then signals next.
Hmm.
And also, I do expect that every time when you do get a signal, you always get rationale behind the signal. So why we are doing this, why we're moving the stop loss, why we manually stop the trade,
Hmm.
why we're trading, why are we taking profit. So there's always like some framework behind it, and it's our wish to teach you that framework, not to copy that on a one-on-one basis, but to model that so it can fit your own personal system eventually. So, with that said, I want to wish all of you guys a happy Friday, a happy weekend, and talk to you guys next week. Bye bye.
Happy Friday, everyone. Take care. Bye.